Caracas and Washington have struck a deal to send up to $2 billion worth of Venezuelan crude to U.S. refiners, a move that would divert supplies from traditional buyers such as China and ease pressures from mounting storage bottlenecks, U.S. and Venezuelan sources say. Under the arrangement, Caracas would turn over roughly 30 to 50 million barrels of oil for sale at international prices to Gulf Coast refineries, with proceeds reportedly to be managed to benefit both Venezuelans and Americans. The pact follows intensified U.S. pressure on Venezuela's leadership and comes amid a deep political crisis after the reported capture of President Nicolás Maduro. U.S. officials have pursued tougher measures, including a naval blockade that had restricted shipments since mid-December and led to crude piling up in tankers and onshore storage. The new exports would reopen a channel for sanctioned barrels that had been unable to depart, while potentially reshaping global flows as China looks to alternative sources. State oil firm PDVSA has acknowledged negotiations with U.S. counterparts and emphasized that any sales would be commercial and at market rates. Chevron remains the only major Western company with a U.S. license to handle Venezuelan crude under existing sanctions, and any expanded U.S. imports would likely build on that narrow legal framework. Major U.S. oil companies have been engaged in talks with administration officials and are reported to be seeking strong legal and financial guarantees before committing substantial investment to revive Venezuela's deteriorated oil infrastructure.